Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So again here we have seen hedge funds and money managers, they've increased their net long positions on both gold and silver in the latest week. As we mentioned with you last week, everything was going to be about the Federal Reserve. And with that, we saw a massive move last week on both gold and silver. So over an 8% move to the upside on silver last week, over a 500-point breakout to the upside on gold. As I mentioned in silver asset of the day, that puts us up over 1,000 points profit on silver alone, over 4 positions. So each 10 lots that you would trade on silver, that is over $1 million of profit, which all of our members at the Gold and Silver Club have been able to benefit. As we mentioned to you previously, the month of December, the narratives have completely shifted. It's no longer all about the vaccine. It continues to be about quantitative easing, the stimulus that's been provided not only by the Federal Reserve, but also the European Central Bank, by the Bank of England, by the Bank of China. And the most clear way just to show you this visually is if we move over and have a look at money supply. So with that, let's go over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. So the first chart I'm going to show you today is M1 money supply, and essentially over the last week here we have seen more QE, more money printing than we have over the 6 weeks which followed on from the crisis over March and April from the pandemic. So you can see here very significant increase, and with this of course gold, silver, platinum have all skyrocketed in the latest week. So this is a great way to just visually show you this is the increase in money supply that we've seen here. This is where you've seen the dollar index break down to 2-year lows, you've seen copper prices break out to 8-year highs, you've seen platinum prices up 28% in a month, you've seen oil prices up over 30% in the latest month, you've seen gold prices break out to 1-month highs, you've seen silver prices as well break out to 2-month highs. So with that, it's provided a perfect opportunity for us in the last week to really capitalize on these breakouts. As we mentioned to you previously, the window of opportunity for you to capitalize is closing. There's already been some huge moves here in the latest week, but there is still time. And you would have noted, of course, we've got fresh lockdowns now in the UK, in Europe, in America, globally now. This is the new norm as we continue to see the virus spread. It's not going away. So it's the perfect opportunity for you right now as we go into Christmas to learn the right approach to trading the markets. And not only that, you want to supercharge your savings and income going into next year. It's more important than ever to be recession proof now going into a new year as you're planning out 2021. There's never been a better time for you to learn to trade the markets in the right way and capitalize on what is to come in 2021. Hedge funds, money managers, banks, institutions, they have had record-breaking year over 2020 trading the financial markets. From JP Morgan to Citibank to Bank of America, Goldman Sachs, they have been making billions of dollars over 2020, record-breaking profits trading this volatility. And of course, there is an opportunity for you to do the same, to trade the same way that the hedge funds, the money managers, the banks and the institutions do. Trading in commodities is a zero-sum game. So in order for someone to make money, there has to be someone on the other side of the trade who's effectively losing money. And predominantly it's the retail market who are taught the wrong way to trade. They're taught incorrectly technical strategies, technical indicators that just do not work in today's market conditions. They're constantly giving up their profit. This is where the majority of the retail market keep getting chopped up using outdated technical strategies, because again, the hedge funds, the money managers, the banks and institutions, they know how technical traders are taught. They know the levels that they will be looking at for their confirmation for breakout trades, for their confirmation for sell-offs. Last week was an absolute classic example of that. Let me just show you here on gold. So what we had lining up at the beginning of last week is so many retail traders were caught on the wrong side of this. So if you just eliminate the price action here that we had going back to the breakouts on Tuesday, Wednesday, Thursday and Friday, let me actually show you where we bought in last week for an additional stacked position here on gold. So we bought on Monday at $1,828 per ounce. This is how the price action was looking on Monday. So at that point, most of the retail market is looking at this to be a sell short, right? So they're looking for a breakdown of a trend channel. They get their confirmation, breaking close below support here. And then they're also looking at this being a head and shoulders pattern. You've got the head, the left shoulder, the right shoulder. This is how how, of course, most of the technical analysts and retail market are taught to trade. And this is where you want to be buying when you've got traders panic selling out of positions. They're getting on the wrong side of positions, and this is where we're loading up. And what do we see the following day after the usual counterflow on the Monday? Significant profit, 200-point breakout, further breakout on the Wednesday after the FOMC statement, where in fact we stacked another position to bring the total amount of trades that we've got running on gold to 10. And then on Thursday we had the follow through, the breakout back above 1,880 US dollars per ounce, taking the price up to 1,896 US dollars. Then on the Friday we've got a pause here after 3 days of consecutive gains, and you can see now we're broken above the neckline. This has been a really solid move, and very much again, much of this was coming down to stimulus, quantitative easing, the Federal Reserve keeping interest rates lower for longer, and of course being accommodative for future monetary policy and quantitative easing. With that, it has provided this massive catalyst for the metals to break out in the latest week. Hedge funds and money managers, of course, have been on the right side of this. As I mentioned previously, platinum have been leading the way, particularly on the higher time frames here. You can see where platinum was the first to break out on the weeklies here. We've seen over a 7% move in the last week for platinum, but over the last month, this market is up over 28%. And now you're seeing silver catch up. Silver's now had a breakout on the higher time frames. In fact, over our 4 positions where we've been stacking between 22 to 24 US dollars per ounce, we've come up to some resistance around 26 US dollars per ounce. So what I'm looking at next week is whether we can then clear above this level and begin the march higher for silver back towards the previous swing highs. On the higher time frames, again, silver is looking solid. And then on gold here, I would then move over to the monthly chart. You can see we've got a reversal on the monthly, similar formations to what we've seen previously over the last 2 years here at this time of year. What I would be looking at is to see how high gold closes over the month of December, and then you've got this potential follow through as you go into January and February. But again, it's very much a trader's market here. It's not just about buying and holding. It's just as important to know where to bank profits in the market as it is to enter into positions. The best example of that was the previous week, where you saw on the European Central Bank announcement after the breakout, where we saw a move all the way up to 1,875 US dollars per ounce. Gold subsequently sold off 500 points. This is where you want to be banking around the highs here, and then reload again as we did last week at 1,828 US dollars per ounce at the lows. So just coming in and out the market will make you a lot more than just buying and holding at the moment. You need to know the right levels of liquidity, where to bank profits and where to then reload. This enables you to really supercharge your trading account. Again, the big investment banks out there, they've not made money just by buying and holding. They've made money by trading. This is where they've made the most amount of returns, into the billions over 2020. And you definitely want to be trading the same way that the hedge funds, the money managers, the banks and the institutions do. So with that, if you would like to find out more, join a community of successful traders and learn a research-driven approach to the market, where you're going to be utilizing our data, in-house intelligence, combined with the intermarket correlations, the daily cycles, the monthly cycles, the weekly cycles, understanding of capital flows, when it's most optimal to enter into trades, and also when to bank your profits as well, when to lock in those profits regularly. Being nimble is so important in these markets, and this is the way that you will supercharge your trading returns and your income as you want to be thriving now going into 2021 instead of just surviving. It's more important than ever to be recession proof as we continue to see restrictions, new lockdowns globally. There's never been a better time to upskill, learn to trade the same way that the banks, the institutions, the money managers do, who are making billions via trading the financial markets. So if you would like to find out more and join our live trading room mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.